Yes, the Reserve Bank has been bashing away at the dollar for 2 years now, with 8 rate cuts since November 2011, to almost no effect whatsoever. The 0.5% rate cut in May last year, followed quickly by another one of 0.25% in June, did have an impact on the exchange rate, but not for long, and the dollar quickly returned to parity and only fell this year because the US dollar rose. The August rate cut this year had no effect either, and so the Reserve Bank is now reduced to talking about how uncomfortably high it is, hoping someone listens. With rates in America, Europe and Japan near enough to zero, ours are still high. But the Reserve Bank dare not cut anymore for fear of causing a housing bubble. Since, as they observed at the meeting, house prices are already rising significantly in Sydney, and that's due to lower interest rates. In other words, the whole economy is being suppressed by a high dollar because of Sydney house prices. Well, that's one way to look at it anyway. The latest data shows that Sydney house prices are up 12.5% year on year versus a national capital city's average of 8.4%. The dollar is now just under 94 US cents, having been as low as 93.5 after the minutes came out, before returning most of the way back to 94 this afternoon. The share market fell a bit more than 0.5% today because of falls among all the banks and resources leaders. Orica retraced some of its recent gains. Qantas and CSR also fell heavily, while CSL was well bid. There was no discernible trend among global markets. Some were up, some were down. And finally, commodities all fell: precious metals, base metals and oil. And that's finance.